The broadcast is now starting. All attendees are in listen-only mode.
The other day, and in it, she mentions that we have a new budget template for the 2014 forecast and the 2015 AOB. And Dan has put together a new budget template that is a little different than what we've had in the past, in that it populates existing project data from Lawson. So we wanted to take the opportunity to have Dan go over the budget template with you and show you how it works and answer any questions that you might have. This template has been distributed to program staff in Washington. It has not been distributed to the field yet. The RDs wanted PMs, APMs, FAs to take a first pass at the budget and then send it out to the field. So Dan will present a general overview of the changes and specific guidance on the budget template itself.
Thank you, everybody, for coming. Let's just get started. All right, so, first, so why did we make all these changes? For one, we wanted to provide information to you guys to make your work of budgeting easier. And once we get to the new template, you'll see the information that we've provided, and hopefully it will make your lives a little bit easier. We're always trying to improve our forecast data, especially by quarter. This is something that our board, and senior management, and our bank are very interested in, and we hope that this new template lends itself to continuing to get better at doing that. Some of you may have heard or been part of some of the conversations about trying to move to a longer-term budgeting cycle, like a 3-year cycle or something like that. While we're not quite there yet, we think that this template is a good step in that direction. So ideally, we can move towards doing longer-term forecasting, consistent with our award cycles and things like that. And finally, at least once everybody is used to this new template, we hope that it will save you time in preparing it and save us time in compiling everything and getting everything uploaded into Lawson. So what's new? We have changed the existing business template. We have also changed the discretionary, unrestricted, temp-restricted template. It looks exactly the same as the existing business template. We'll get into that in more detail in just a little bit. And we have combined the 2014 revised new business and 2015 new business all in one tab, which hopefully will make it easier to think about the flow of new awards from year to year. So what are the advantages that we see of changing things up and trying to do things a little bit differently? Well, for one, you guys don't have to run a ton of ASRs because we think we provided the essential information that you would need already in the template, so it's there for you. As I mentioned, we hope that this will lend itself to more accurate quarterly budgeting because, again, the data is there and you guys will be able to spread the budget data by period, which will flow into quarterly data, which we can then use for reporting purposes and things like that. So for 2014, year-to-date data through June is already in there, so you will have that to go off of, and that actually will count as the revised budget for 2014, those first 8 periods of data, and then whatever you add for periods 7 through 12 will also be combined with the existing data, and that will be the revised 2014 forecast. For 2015, you'll have to enter all 12 periods. And finally, this new template captures all activities that either have an AOB in 2014 or have activity in 2014. So occasionally, if you guys participate in the surplus deficit meetings, sometimes you'll see something that has activity but no budget, and we don't understand why it is. We're hoping that including everything with activity here will give you guys a little bit of a heads up before those meetings, so you'll be prepared to answer questions before we even ask them. It also, we think, will make our lives in the budget office a little bit easier. We don't have to check the revenue calculator. We don't have to spend as much time reviewing the revenue calculations as we did previously because the fee information is part of the information from Lawson that's included in the template, and we use that directly to calculate the burdens and revenue and stuff like that. the new format is more conducive to uploading the budgets into Lawson, so we can spend less time doing that ourselves. It is a sort of lengthy, painstaking process. The way the data is presented in the new template for existing and discretionary activities, as you'll see, it lends itself to making pivot tables. I'm sure a lot of you are very, very good at using pivot tables and find them helpful. You can do more analysis and deeper analysis than what the summary information that's already included in here provides, if you wish, by building pivot tables with the new data. We won't go into that in depth here today, but if anybody has questions about how that might look, if you're interested in doing that, come talk to me afterward, and I can show you what I have in mind. Also, the summary templates, we have not changed those, so you should be used to the information as it's presented in those. And the AC to GL timing adjustment for commodities, we haven't changed that either. The way you link the cells is a little different just because the spreadsheets themselves are a little bit different, but by and large, it's the same thing. The commodities tab, which I know you all love, has not actually changed. For program income and enterprise funds, for 2014, the initial budget information is preloaded into the template, so you would just revise that as you see fit. The template itself looks the same. EF, same thing. For 2014, the template looks exactly the same. And then for 2015, we have not changed the program income and enterprise fund budgeting templates. So if you have used them before, you won't notice any difference. If you have not, we will show you here today how to use them, or you could always ask us or another or a colleague who has both. For new business, again, new business will look the same as how we've done it in the past. The only difference here is that so the existing 2014 new business template has arrived to you blank because we think enough time in the year has passed where whatever you had entered last fall is probably no longer relevant. So we ask that you reconsider what may happen for the rest of the year, this year, and then, of course, what you think might happen next year. So the new business 2014 and 2015 appear on the same worksheet now, which we hope will make it easier for you to keep track of what you've budgeted where. So like I mentioned, some things stayed the same. The summary data presentation has not changed. The commodities tab has not changed, and the way the commodity timing calculation works also has not changed. For indirect budgets, so this year we're doing it a little bit differently. Historically, we have revised, well, we've already done the 2014 indirect budget revisions earlier this year. But we're going to hold off on doing the 2015 indirect budgets until we have a sense of what revenue is going to look like. So we are, what we will do, we're going to distribute the salary worksheets that are pre-populated with the employees and their salary information. We'll get that out to you later this week, so you can use that as you're doing your program budgets to figure out who needs to be covered to what extent. But we are not asking you to complete the overhead budgets at this time. We will send those out in November once we've had time to compile revenue and see what that looks like, and we'll be in a better position to make decisions in terms of allocating overhead resources. We've also updated the vacation percentage calculation based on actual data for the past few years. And so what the template had done previously in overhead, you would enter the total amount, and it would automatically spread it by quarter. That's probably not the best way to do it because everything just looks the same. So what we're going to ask you to do this time around is to actually budget by quarter, and then it will sum, and it's pretty straightforward. And given that we're not quite there yet, we don't need to spend a whole lot of time on it. All right, so that's an overview of what we're doing and why we're doing it, and now let's get to the template itself. Okay, so what I will do, I will run through sort of tab by tab the new template and how it works. I'll start here with the rates tab. There's nothing for you to do here. I just want to, basically I just want to point out that right now the template is preloaded with the microstructure that we're currently using.
Sorry, is there a way to make that a bit larger?
I mean, I don't.
Oh, okay, there you go. Okay.
I'm going to have to shrink it down later, though, so we could see other stuff. But anyway, I just want to point out it's preloaded with the current NICR structure. If and when USAID approves our new structure, we will be able to input that data here, and it will flow throughout the spreadsheet, and the revenue calculations will update more or less automatically. So there is nothing for you to change at this time on this sheet. I just want to point out what it is and what it does. As I mentioned, the summary tabs. This is the 2014 summary for, I'm using Kenya as an example because it's got something on every tab. The summary, you should be, if you've done budgets before, this should look familiar to you, so nothing's changed there. There is also a 2015 summary tab, not too far, here, and again, it looks the same. This is completely blank because none of the information for 2015 is yet available. So anyway, there's a summary for 2014 and 2015, not much there. The quarterly summary is back. Again, there's one for 2014 and one for 2015. Nothing has changed here, and there's nothing for you to input on any of the summary tabs. It's just for your information once you're done. B&P. So B&P, or bid and proposal. The 2014 data is the approved budget is preloaded. You should review what you've spent so far and what you think is what still remains to be spent, and enter the data accordingly. It looks like what Kenya did here is they, I mean, it's all the same B&P code, which is important for every country. It looks like what they've done is identify B&P costs particular to specific activities, and included the active months for those things. You don't have to do it in this much detail. You can lump it all together and make sure the active months are 1 through 12, or you can do it this way as long as the code is the same. It's up to you. And for 2015, this template will be blank, and you'll just have to start from scratch, basically. Program income. As I mentioned earlier, there's not a whole lot that's different here in program income.
Dan, I have a question. So 2014 BMP, we just override what we did before?
Correct. If you want to change it, you just overwrite what's there. Yeah. Any other questions right now? Okay. All right. So program income. So again, this is the existing data for 2014 in the approved budget. If there are changes that you would like to make here, you should do so. And then for 2015, it will be blank, and you'll have to start from scratch. Some things that I'd like to point out here, you should make sure to enter the funder code here in row 4. I included a guide to what number you should enter given what the donor is. If you're not sure as to what donor code you should enter, please ask me. I should be able to tell you. Make sure you enter the months that the activities will be active throughout the year. The numbers correspond to what number that month is on the calendar. So here, the beginning balance information is already uploaded because this had already been done last fall. You may want to update this with known information. You should know by now what the beginning balance was at the beginning of 2014, and you may want to update your sales projections here. And for these for the sales projections, you may want to link. This is something that you may want to link to the commodities tab, which we'll get to in a little bit, and I'll show you how to do that. I just want to point out that this is something that it is affected by information that you enter in the commodities tab, or at least it should be. So this is an automatic calculation, and then I think the rest of this is fairly self. Oh, you want to make sure this is very important. You want to make sure that you enter whether or not the activity is restricted or unrestricted. There's a good chance that you know for your program income activities what is what. If you are not sure, you can look it up in Lawson, or you can ask me, you can ask one of your FAs, or another colleague who knows how to find that information in Lawson. But you want to make sure that you enter 1 for restricted activities and 2 for unrestricted activities. And then for the rest of it, you will want to just enter. We do enter all numbers in here in thousands. So if you want to budget $1,000, you would just enter 1. If you want to spend $1 million, you would enter 1,000, so on and so forth. So you just want to enter your expected expenses by account category for the year, and based on whether it's restricted or unrestricted, that'll factor into the revenue calculations down here. There are some program income activities that still follow the parent donor project fee structure. In those cases, you want to make sure that you enter that information into these cells here. Otherwise, I believe our NICRA applies to the vast majority. There are 2 program income tabs available. That's just to give you extra space for countries that have a large number of program income activities. Before we move on to the next tab, any questions on program income?
Not a question, more so a comment.
Yeah.
The line you had mentioned about the sales.
Yep.
You had said suggestion on linking them. Maybe to cut down on the errors, instead of it being suggestion, like requiring that it actually be.
That's a good idea.
To make sure that the numbers match from your commodities tab to this tab. I mean, you should be checking that anyways, but if it's already linked, it's already.
That's a good point. You're right. It's actually. I don't like to demand things of you guys. I was just trying to soften that blow. Strongly encouraged, emphasis on strongly encouraged to link this that row to the commodities tab to make sure that everything checks out. All right. Anything else on program income?
This is my first time around the budget.
Welcome.
But when she says that, is there a sort of checker that you have when you pull them all together to ensure that?
You'll be able to see. You can compare the total that would show here to the total that would show for the related activity in the commodities tab. That's one. I mean, you could do it that way. You could check by activity, and then you will be able to see. I mean, overall summary information on the summary tabs. I mean, you can compare that to the other worksheets, and you can check it that way. But once you start working with it, you'll see it'll become more evident the way you cross-check things. And if you have questions as you're working on it, let me know. But I wish I had time to go through in extreme detail now, but unfortunately, you got to get through this whole thing. But that you can check by activity by comparing the activity that you would enter in a given column here with what you would show in the commodities tab. Yeah.
And also, the commodity cost, that's a requirement to be linked with the commodity tab, or is it
the cost? Yes, you need to know the volume. Yeah, the number of units.
I mean, linking this, is that required? I mean, do we
Yes.
need to link it?
Yeah, you should. Yes, you should link it. I mean, I strongly recommend that you link it. I guess you don't have to, as long as you look to make sure that the numbers are the same in both places. It seems to me that it would be easier just to link it, because then you're comparing. All right, so let's move on to enterprise funds. So again, we have not changed the template from the past. This is the 2014 tab. The 2015 tab will be completely blank. The funder code for all enterprise funds is 11, and that's pre-entered, so there's nothing for you to do there. You're going to want to make sure that you enter the start and end months for enterprise funds. Unless there's some strange circumstances, I would think that for the most part they would be active throughout an entire year, unless you're planning on starting one mid-year or something like that. Then there are no restricted enterprise funds anymore, so they are all coded as 5 here, so there's nothing you need to do in row 10. If you know the approved capitalization number, you should enter that here, or in where indicated in row 12. You will want to estimate your beginning. One thing I want to point out before I go further on enterprise funds, do not link anything here to the commodities tab. The way enterprise funds are set up, the revenue is all recorded in GL, and they're just set up that way. So do not link anything here to the commodities tab. You end up throwing off the timing adjustment calculation. So you will want to estimate the beginning inventory. You will want to estimate purchases and additions throughout the year. You will want to enter the number of units and the unit cost, and this information will calculate automatically. If you are receiving donated commodities to an enterprise fund, which is rare but could happen, you would want to make sure you reflect that here. Down here in rows 21 and 22, you will want to estimate your sales by entering the units and the price at which you will sell those units. For inventory used other, you would use that if you plan on doing any free distribution as samples as part of your promotion strategy or something like that. And then this will, a lot of these are formulas that will calculate automatically. Your sales will calculate here automatically based on what you enter here. I have little comments in some places to help guide you as you're working through this. It's set up by default to put the information, the COGS information in male condoms. You would want to move this if it's not a male condom enterprise fund, and you would just simply, copy this calculation basically and make sure that it's pulling the information from above into the correct product. The gross margin and gross margin percentage will calculate automatically, and then down here for your other expenses, you will just enter, enter your projections as you see fit. That's it on enterprise funds. Any questions? Great. Okay. All right. Next, here, let's jump right into the commodities tab. Now, I'm going to go through it a little bit here, and then we'll talk about, the new existing donor template, and I'll show you an example of how to link it once we do that. But let me just do a quick overview of commodities before we do that.
Excuse me, Dan?
Yeah.
When you say the EF commodities should not be linked to the commodities tab, that also mean the commodities for the EF will not be reflected on the commodities tab?
Correct. The EF, all EF activity should be self-contained in the EF tab. Okay. Yeah.
Even if we're procuring commodities?
Even if you're procuring commodities, there's space for you to indicate that in the enterprise fund template.
And not included
not in the commodities tab, yeah, because the way enterprise funds are set up, there is no timing adjustment. There is AC and GL are the same for enterprise funds. So if you put it in both places, it will throw off that calculation, and it'll make it'll throw off the summary data. So enterprise funds are their own thing. Anything to do with an enterprise fund should stay within that enterprise fund, not appear. You should not enter anything related to enterprise funds on any other tab. I also want to, I should have mentioned this at the beginning, something I want to emphasize. I ask that you please do not manipulate the template other than where we ask you to input information. Don't add columns. Don't add rows. Don't delete rows. Don't delete columns. Don't, highlight blocks of cells and move them somewhere else. It's the template can do a lot, but it is somewhat fragile in that if you start doing things like that, the whole thing will break, and it will take you and I more time than we should spend trying to put it back together. So please, please do not alter the template in any way. If you notice an error or an issue in terms of space, you need more columns for program income or something like that, please ask me. I will be able to fix the template for you and get you whatever you need in a short amount of time. So just please do not make any changes like that on your own. Okay, so here we go, the commodities tab. So, okay, the cells that are shaded in green are where you have information to be input. All right. So you will start by estimating. So again, this is 2014. So for 2015, it's going to be totally blank, but the concept is the same. You're going to want to. You may know your inventory balance as of period 8 of the prior year. So for 2014, period 8 last year. For 2015, it would be period 8 this year. You would want to estimate your projected distribution between basically now and the end of the year. Now, for 2014, you can skip this calculation because there's a good chance that you would know at this point what your inventory balance was as of the beginning of the year, you can just enter that information here into this cell and overwrite. You can overwrite the formula because, as you can see, this is just a simple function of the cell above it. Okay. Anyway, all right. So here in rows 10 and 11, you will want to indicate in units and by quarter where you're expecting or when you're expecting the commodities to arrive. So again, here you will enter units and try to do your best to estimate in what quarter you think the commodities will arrive, because that has a big effect on our quarterly projections.
Is this the actual from first 2 quarters, or is it the initial?
No, this is the initial AOB. Yeah. And then same thing for quantity out. You're going to want to indicate what your unit. This is in terms of units. How many units you predict that you will sell by quarter. You'll want to enter that information, and you'll also want to indicate by using either row 12 or row 13. Whether you're selling the stuff or you're giving it away for free. If you're selling it, you would use row 12. If giving it away for free, you would use row 13. And then down here, your ending inventory by quarter will automatically calculate for you. Next, you're going to want to enter the unit costs for your purchases. And so the cell here is, well, I'll show you an example later, but the information here in this row is actually what you would you'll end up wanting to link that to another worksheet, and I'll show you more how that works once we start looking at the existing donor projects tab. Yeah.
Okay, so this is 2014. Why are we not using actual for quarter 1 and 2? Because we know that now.
The honest answer is because I simply did not have time to go and update every single product in PSI for you guys.
And we shouldn't update it. We should just go off of what was in the AOB in 2014.
You should probably
okay.
Yeah. You should update
so it. It is going to be actual. It's just that we're going to.
You're going to have to put actual information. Yeah, exactly. Yes, donated commodities should appear here. Yeah, and you would put them here. The inventory coming in, you would put here in row 11, where it indicates that it's for donations. Okay, so you will enter your unit costs for purchases here. This row will automatically calculate for you. This is the information that you will link to the other tab, which I'll show you in just a minute. Down here in row 19, you are going to want to enter the sales revenue per unit, so that's the price that you're selling the commodities for. And then that will, the program income sales info will automatically calculate based on the information you enter there. And the rest of it is automatically calculate for you. I should point out that in this tab there are more detailed instructions on how to complete this worksheet down here. I encourage you to reference that as you're working on it if you get confused or get stuck. If you don't feel like reading it, just come and ask me or another member. Ask a colleague who has done this sort of thing before if they can help you. And again, we're always here to help, so feel free to come to us. All right. So if you scroll all the way to the end, you'll see the summary commodity information, which links to the other summary tabs. I don't need to show you guys that because it's honestly not that interesting for right now. All right. So let's move on to the new existing donor projects tab. So it helps. I'll say now, it helps when you're working on this if you have 2 monitors, because it is a very long file. You should freeze the rows as you see it. Anyway, let's just go through the information that's here. So we've got basic stuff like region and country, the activity code, of course, the description, the funder, the contract currency. So that does not mean that the information here, the actual financial data in here is in donor currency. All the data that's presented in these templates is US1. But we wanted to let you know that if it's in a currency, if the contract is in a currency other than USD, for your own information as you're filling this out. We're not really in the business of predicting exchange rates and things like that, but if it's in a volatile currency, it is something that you might want to keep in mind as you're populating the template. The summary account category descriptions, these should look familiar. These are what we have used historically for budgeting purposes. You can see we've mapped them to both the AC and GL account categories, which will help us in terms of uploading it. You can see the fee information from Lawson as it's applied to each of the account categories. That's already there, and that will factor into the revenue calculations, which we'll get to shortly. We include the beginning and end date from Lawson, the number of periods remaining based on the end date, and then we've also got the POP end date from Lawson. And this, I think we use this to allow for recording of trailing costs and things that might have happened after the fact. So anyway, you want to pay attention to the end date information as you're budgeting going forward to make sure you don't put budget for periods when the activity no longer is past the period of performance. So next,
Sorry, can you? What is the purpose of the POP date? In addition, why do we need it for planning? Budgeting purpose? We don't.
I see. Now, personally, I'm actually a little confused as to the contract end date and the POP end date. I know both exist in Lawson, and I think the POP date is
a couple of months extra depending on the award amount.
Right. Yeah.
But for budgeting purposes, I do not see why we would need to include it here or to show it.
Well, in a lot of cases, I mean, you'll see there are some activities that have. So you'll see some activities in these templates where the end date is, 2012 or 2013, but the POP date has been extended beyond that, and you'll see activity in 2014, for example. And because I don't work very closely with all these activities, I don't always, I can't really say what the reason is. Hopefully you or your somebody on your staff could help you understand why the end dates look like they do. Yeah.
No, if you're close to the end date of your project and you know for certain you won't be able to pay everything, let's say by March 31st, just the contract end date, you will have trailing costs. So potentially you might see in your budget expenses put into March and April, as trailing costs. But the field, they would be able to estimate that when they're doing their estimations for the budget.
But if we're talking about, you just mentioned that maybe the project ended in a previous year and it's been open for some reason, I assume, for journal entries or something.
That sounds about right.
Like that? So should those projects that were closed prior to this year be excluded from this?
I don't think they should be excluded, because if there's activity in 2014, we want to see that. Now, you may not want to budget beyond what's already incurred in 2014, for example, if you know the activity is ended and there shouldn't be any further activity. But for the sake of completeness in terms of the budget, if there is activity that happened this year, it's going to show up here because we do want to include that information.
Okay. Even if they're just journal entries, there's no...
Because they're not activities happening. They're
It has an effect on our revenue and expenses. So
actual expenses for the year they need a total amount. So even if it was closed the year last year or 2 years ago, if there's expenses in actual, it needs to be fair enough.
So again, if you don't expect, there's a good chance that for some of the things that look like they're ended, there's a good chance that you actually wouldn't have to or wouldn't want to budget anything further, because whatever's happened has happened, and that should be the end of it. But again, we can't know that. You guys who actually work with these activities should be able to figure it out somehow. I can try to help. Ask me if I might be able to help, but I don't want to overpromise anything. Okay, so we include the total contract expense budget for all these accounts. We include the inception to date expenses. We include the remaining contract expense budget, which is simply a function of the information here in columns P and Q. We include the existing 2014 AOB, so the total AOB. We include the year-to-date AOB, the year-to-date expenses, and again, the year-to-date expenses, so those are the expenses through period 6. those will be those expenses will be uploaded as the revised budget for the first 6 months of 2014. All right, and so then anything that you enter beyond that would, I mean, that would also be uploaded as part of the revised AOB. And then it continues on. So once you enter data for 2014, let's enter some dummy data here so we can see what happens. All right, so let's see, this activity ends. Well, so the POP end date is like the end of June of next year. So there's still plenty of time for stuff to happen this year. Let's see, let's just say you're going to spend whatever this account category is. Let's say you're going to spend $1,000 a month there. So you'll enter 1. And then it may fluctuate, it may not. Just for the sake of this example, we'll drag it out to here. And you can see over here that the revised budget had changed from what it was, because this is the function of the previous remaining budget and then whatever else you budget for the end of 2014. And it will give you the total remaining budget for on the contract, right? So you can use this information to then enter your projected expenses for 2015. So since this only goes through June, and there's a lot of money left, let's just say you're going to spend about 9,000 is close, right? So we will extend this through June, leave the second half of the year blank, and all right, so we overspent a tiny bit.
Or you could just take the remaining balance and divide by the estimated number of years if you believe that they're going to be spread evenly.
Yeah.
And I would imagine that a lot of the costs, you're going to do some type of calculation like that. You know, what is the balance? What are the remaining number of months? Spread it evenly, and look at some other costs like the commodities, and really figure out what period are we going to spend that money, and look at the subs and what period are we going to spend that money. And you know, so it'll be a combination of, because there are a lot of numbers here, and you're not going to put a individual number in each month for each year. But there are some costs where it's what you have to do, particularly for commodities, or you know, maybe subs you have at the beginning or the end, or
yeah. So like Rabel was saying, what you could also do is you could take remaining balance information and simply, you know, you can enter formulas here. So you could take the total and divide by the number of months, and you know, you can basically enter whatever you want in here, however you want, do what makes sense to you and what makes sense within the context of any given activity.
How important is it for you that we project by month? What if we want to project by quarter? So let's say that I do everything in one column. Is that effective?
I don't. So let's see. It was. I don't. Not necessarily, because if we're looking at summaries by quarter, like when we have the quarterly meetings, if we would, or I mean, we're only looking at quarterly data, and the quarterly data would be the sum of the 3 periods in each quarter. So I guess in theory you could.
So do you ever look at it individually, the month?
well, it's all set up to do it on a monthly basis. And when we actually upload the information into Lawson, we have to do it by month.
Oh.
So if it's by quarter, there's an extra step.
What would happen? So what would happen? Sorry, just give me a second. So what would happen if you only did it in 1 month? If you put expenses in 1 month per quarter, if you're running ASRs every period to check on your activities, your year-to-date budget information would be off until you hit the month and the quarter where the expenses are, and even then, it might not be as accurate as it could be.
So,
but I also feel that will also solve the timing issue we usually have in the surplus deficit, where we'll talk about timing. This is maybe we are off target because of timing, so why don't we just have it reflect the budget reflecting itself in the period where we're expecting the expense to be made?
Yeah, well, that's what we're at. Yeah, that's what we're looking for here. You should enter the expenses in the period when you expect it to hit to help minimize the timing issues that we see in the surplus deficit meeting.
Okay, which means January could be blank, and then February has an amount, March is blank, for a particular line.
Right, yeah. If you think the expenses are going to hit in February, but not January or March, put the expenses in February. Absolutely.
You don't know that, and you're doing it quarterly. You can just straight line the.
Right, but if you don't, yeah.
But I think the risk also in doing it maybe equally is that during surplus deficit meetings, that this is where people these comparisons will come across, because this will be the basis for that analysis, right? What we put in here on a monthly basis.
Yep, exactly.
So you have to also be careful, I think.
Yeah, and I think, what you guys should focus on the bigger stuff. Focus on getting commodities in the right period. Focus on getting big subs in the right period. If you're buying a fleet of vehicles or something like that, you're going to want to try to get that in the right period. For line items that are a smaller percentage of the overall budget, honestly, when we look at the summary information each quarter, it's less of an issue if those things are spread out, right? So we're really asking you guys to focus on the big ticket items that are in these in terms of getting those in the correct quarter. Okay, so over here we have the revenue calculation, and I want to point out here, all the way in column BE, we ask you to enter the funder codes, all right? So the codes don't change from year to year, template to template, right? This is the key. And since we provide you with funder information all the way back here somewhere, this one is DFID, so we will, you can see how two screens might help you here. Let's see, what is the code for DFID? It's 3. So you would enter a 3 in that cell. And make sure that you do that for each activity, all right? And so, anyway, so this is, that's how you would enter data for existing activities now for the end of 2014 and 2015. In this tab, if you scroll all the way down to the bottom, I wish I could see the little cursor thing. Anyway, once you get really far down, so this thing can fit 100 activities. I don't think there's anywhere that has close to that amount, but just in case we get a whole bunch more business in the future, the template again. I want to show you just all the way down at the bottom, around row 6,000, I think. When you hit shaded cells, you've hit the summary area. There we go. So there's
a group, and we should group those other cells, right?
Go for it. Yeah. If it makes it easier for you, go for it. So I want to show you guys summaries that appear down here. The first summary that scrolls is the overall summary, so it just totals up everything from every activity that appears above it. And then after that, we've got summaries by funder. All right, so it follows the funder key that I showed you guys just a minute ago.
Dan, is there any differentiation between donor and funder for sub, let's say, to someone, and funder is USAID, the donor, but whoever's giving us the money is different?
So we want to know the ultimate source of the money. So if we're getting something, for example, from a Ministry of Health, but they're getting the money from Global Fund, we want to know that it's Global Fund. And you'll see the list of donors that are listed in the key. It's a limited list. So you want to make sure that whoever shows up in the funder here, it may not show up exactly in that box, but one of those things in the box should be the ultimate source of the funding. And again, if you have questions as you're going through your stuff, ask. All right, so anyway, so there are summaries once you scroll all the way down here. There are also, of course, the summary tabs, but this gives you a little bit more detail just in case you're interested. All right, let me show you the DF temp restricted.
Can I ask one more question?
Yeah.
The existing?
Yeah.
You did the expenses.
Yeah.
To date, all posting levels are separated, right?
You will have to see, people have budgeted, budgets end up getting uploaded differently depending on the place, right? So you will have to see by the activity code what posting level you're looking at.
My question was, we have sub-awards that are put in different posting levels and a project that has 25 subs.
Okay. Those every posting level.
Then put it in one in the.
You would have to. I would say you should check to see if each posting level is represented here. I mean, here there's 3516, and it looks like there are. Well, there are at least there are 2 components of 3516 here. You'd have to go through and see which posting levels are there and which aren't. Yeah,
But we need to follow how they are populated here and not.
You should. My advice would be to follow how it's populated here. If you notice something that looks off in here, you may want to look into doing a realignment or something like that. But I recommend that you follow the way it's presented here, because I mean this is the way the budget will get uploaded, and this will be used for when we review quarterly performance.
I have a question on revenue. There are all kinds of adjustments on revenue in 2014 already posted.
Right.
That's expenses, for example, so it's not a calculation from expenses. And we always have to explain that variance. Is that okay if I just override, for example, the revenue calculation to that adjustment, or are you uploading them from somewhere else?
Oh, you think?
Is there a place on your for adjustment?
Good question. I only built this thing. I don't remember. Okay.
Plus losses due to overrun.
Yeah,
So
you can enter that here.
A place for adjustments for revenue.
Okay.
Yeah.
So whatever I know is already there, I can just put it to the upload there.
Whatever. If you enter it here, it will be uploaded. If you and any adjustments that you enter there would get uploaded.
Kind of relate to that.
Yeah.
How are milestone payments, like KFW, for instance, how is that taken into account on the revenue line? Before we have to hard enter.
I think you still need to hard enter milestones. Yeah, sorry. I couldn't figure out how to get that to work. Yeah, sorry. Milestones you would still have to hard enter. All right, anything else on the existing tab?
If we're like 90% sure we're going to get a no-cost extension,
Yeah.
we budget past the listed pop date.
Yes. Now, what might happen depending on when the extension comes through? So what happens if when we try to upload stuff that is in periods beyond the date in Lawson that says the end date of the contract in Lawson, those expenses will not be able to be uploaded, and they'll get kicked out into the projected new business activity. But once the NCE comes through and it's entered into the system and the end date has changed, we can then do the upload again using the same information basically, and then it will extend into the appropriate periods.
But these no-cost extensions belong in BMP, or do they belong in this existing donor project?
I think you can put, if it's an existing award.
The award that would get a no-cost extension.
Well, if it's a no-cost extension, the balance would be on there, and you'd just be spreading the balance beyond the period of performance.
Okay.
So that would be.
I think you should leave it in this tab. Yeah.
If it's a follow-on, then it would go in new business.
Then it would go right, exactly. Yeah.
So if we're not 100% sure we'll have a no-cost extension, should we budget beyond the end of the project, or should we just put all the money before the period of performance, knowing that that would be artificially a high burn? And then if we get a no-cost extension, we would understand that we would need to push money.
If you're not sure about a no-cost extension, I personally would recommend that you don't budget as if you were expecting one.
Or even if you are expecting one. I guess if we're 80% sure, 90% sure, there's no way to actually know that they'll come through with it.
I would argue for any no-cost extension to go in new business. Like, the only thing that we usually put in existing donor projects are signed contracts.
But if it goes in new business, you'd be adding money. is already recognized in this.
I guess it depends how you're budgeting it on the existing tab. Yeah, if you don't think you're going to be able to, if you're only budgeting on an existing budget, what you think you can spend out within the period, and then you put the balance in the business.
But are you allowed to do that, or aren't you supposed to? You're supposed to stick to what's in the contract, right? Because you're talking about manipulating the amount on the contract.
Yeah.
And replacing it by what you should spend.
Talking about projecting what you can spend within a current period.
And then putting that where?
Rather than just dumping everything that's in the contract in the current period.
But once it's uploaded, it's going to not work, right?
Yeah, it would kick it out. I mean, then once the extension comes through, we'd have to upload it again. I think I would recommend putting that information in this template and not putting the same activity in both new business and the existing business.
So how often do you get turned down for a no-cost extension? If you have money left at the end of the award and you ask for a no-cost extension, how often do you get turned down? If I get turned down.
There's no answer to that. It totally depends on the donor and the situation.
I'm just thinking about something specifically for Global Fund. So if we know we have a large chunk of money that, there were delays and now we have all this money and we need a no-cost extension, it's unclear whether or not we'll get a no-cost extension. Would the guidance be to budget everything we have up to the period of performance, realizing that we can't actually spend all that money? Or would it be to budget realistically for when we would probably get a no-cost extension and risk not getting the no-cost extension, and then having planned to spend X amount of money that's outside of the period of performance, we don't get a no-cost extension, so we never spend that money. So we don't end up spending out the full contract value.
Yeah, I see what you're saying. I think that you should...
Since this is for our spending purposes, you wouldn't want to budget a huge amount that you're not going to be able to spend. So you want to spread it out.
Your best estimate of what's going to happen.
But related to, I think, that affects multiple countries, a multi-country project like COF, for instance. We don't actually know what money is being moved where as of today. That is still in discussion. So for those countries who don't, they don't know if they're going to be, if money is going to be taken away from their budgets or money is going to be added to their budgets, how do we account for that at this moment in time in the AOB?
And I'm going to the guidance. Like in that example, what is the guidance that we should do if we don't know what's going to happen?
Well, the guidance for new business is if you think it's
70%
or greater, and that's that's like a guess, you include it. If you think it's below 70%, you don't include it. So if you have a confidence level of 70%, and I don't know how you get quite to a confidence level of 70%, but it's not absolute. But
no.
Yeah.
But what I understood though was that Dan was saying you shouldn't budget the same activity in two different places. So to me, like for the no-cost extension example, it sounds like what will make the most sense is you budget what you think you're going to spend, and if there's money left on the table, there's money left on the table. If you get the no-cost extension later, then you budget for that. But if not, then it's what it is.
If that's your best estimate, then I think that's what you should go with.
Yeah, I think it should be kept simple for us to budget just what we're going to spend, and if there are any excesses, so we don't make the AOB. We don't try to make the AOB to reflect the donor budget per se, because if we are trying to take account of the no-cost extension, the existing project, it will be like we are trying to match the AOB to the donor budget.
Right.
So which the AOB should actually reflect what we know.
Correct. That's right. Yeah.
Think we know.
Yeah.
Or we think we're going to spend.
So I think that partly answers a question that I have been receiving from a number of people, where for the WHP project, we have some realignments that are being completed right now.
Okay.
And we don't know for sure right now they will all be approved.
Okay.
It would make sense that people, for the AOB process, use their realigned budgets, even though they haven't been approved.
Oh yeah. If you think there's this 70% chance that it would be approved, then I would say use the realigned budgets. If that's your best guess of what you think will happen, go with that. Okay.
I think I'm a little unclear on like the purpose of splitting up the tabs between existing and new business. Because I understand the 70% confidence interval, and of course we're never going to know exactly what will happen. But at least my impression was that for the existing donor projects, that's money that we have signed, we know it's there, 100% sure.
Yep.
So I'm a little confused with the guidance to use budgets that maybe aren't realigned or to put in a no-cost extension if we're pretty sure we're going to have it, because then we're also
But as part of a no-cost extension is an extension of something that does exist.
Already there, science.
Yeah.
Yeah. Okay.
Like, yeah.
Yeah, you have the budget. The question of the period of performance being longer.
Or with the realignment, I think is maybe a better example, where we're saying a country is going to have X amount of money, they've requested X amount of money, but maybe they won't actually be approved for it. So we're saying that we should use the realigned budget.
It's still the same total amount.
It's realignment.
The
It's
amount would be the same, right? So you would just be.
Not for all of them, but most of them.
oh yeah, because it's a global realignment, actually.
Existing donors.
Yeah.
Yeah.
It's not going to go even if it's a realignment.
Right. Yeah.
Still fits within the
Because it's still the activity exists.
The problem is that some of the
I think
WHP
exactly.
countries have gotten
Yeah.
realignment
More
plus
money.
an increased
Yeah.
CSP.
That's
So
right.
that's the question. Would that still go in existing donors? And it sounds to me like, yeah,
Yes.
Jonathan said we're going to get it.
You know who to get if you don't.
All right. Any more questions on? I mean, I guess clearly we haven't thought of quite everything. These are good questions, and we'll keep it in mind. But I think we should, budget existing, in existing, no cost extensions on existing, stay in existing. New business is its own separate thing. Okay. All right. GF temp restricted UF looks exactly the same as existing. We give you the same information. You would budget this exactly the same as you would the existing activities. The main difference here is that in the revenue calculation, there will be no revenue recognized here. The reason for that being that revenue on these types of activities, in almost all cases, I can't actually think of any exceptions right now, the revenue will be budgeted at the corporate level and only expenses hit programs. In terms of your own countries and regions surplus deficits, as long as you budget the expenses, it will be known, and if you stick to your budget, you shouldn't be penalized at any point for the optical effect that it has on your surplus deficit, because the revenue is being recognized somewhere else. So anyway, so this should be pretty straightforward again, because same as existing.
Oh, hey Dan, real
Yeah.
quick. So is this still going to show up negative like Niger does right now on the surplus deficit? Okay, but no one will ask me again why.
No, right, no, we should, I think people understand that.
When it's negative and it ends up negative, then that's what you
Right.
budget, then it's positive, and it ends up negative, then there's a
It'll lead to questions.
why.
Right, exactly.
Okay.
Yeah.
Why?
But if it's more negative than budgeted,
That will also answer the question. If it's more negative than what you budgeted, that will also answer the question. Yeah. All right, so new business. So like I mentioned, we have combined 2014 and 2015. 2014 appears on the left side of the spreadsheet. 2015 appears on the right. For 2014, you probably shouldn't have anything with a start date prior to period 9, because it's period 9 right now. You're going to want to make sure, again, that you enter the appropriate funder code here. You're going to want to enter the % likelihood of the funding coming in. And then you will, just enter your projected expenses as you would. Make sure you enter fee information down here to the extent that it's known. So the top section, this is where you will enter stuff. This next section down here, this will show you the probability adjusted amounts. And you don't need to enter anything in the lower portion. Only enter stuff up here. You'll do the same thing for 2014 as you would for 2015. For 2015, I ask that you pay close attention to your expected start months. If you don't think it's going to start, if you don't think it's actually going to start in January, don't say it's going to start in January because it will throw off the quarterly projections. You know, so be mindful of the month when the activities will actually begin, and make sure you enter that data accordingly. I don't know, do we have? I think there might be another meeting outside. Should I try to go through the commodities tab thing real quick?
Yeah.
Sure.
Yeah. All right. Okay. So, yeah, bridge fund.
Yeah, I think the bridge fund that goes in new business. Potentially, it could have started, you know, a couple months ago even. So with that.
So the bridge funding, do they have? It's the activity code.
It's a perfect party. There's another party at 3.
Aha. Okay. I guess if we don't have time to do the commodities example.
But we do it as the one commodity.
Yeah. It's the same thing, yeah. So what we saw is the same thing. If anybody has questions, come ask me. I'm happy to show you guys how to do it. There are also a whole bunch of people with budgeting experience who know how to link that up. I'm sorry, guys, we ran out of time. Thank you all for coming. This is we'll send you down. And if you have any questions about any of this, please come and find me. Thank you.
Dan, it's in business. Funded.